Hello and welcome to the Accountant's Movie Review, where we sift through popular movies to find those accounting hidden gems within, which other movie reviews have almost certainly left you without. In this one, we're going to continue on with Shrek here, and recall that last time we talked about the fact that Shrek's major plot is a financial plot, a financial problem that he has to overcome. There's a bunch of other stuff that happens, which is far less interesting than, of course, the financial plot that happens. We talked about last time that the movie starts off with a list of his financial assets, in essence, a balance sheet as of the beginning of the movie. That balance sheet includes the land that he has, the building that he has, the land that that building is on, including a nice lake with fish in it, and the bathroom supplies, including the Book of Fairy Tales. We mentioned that there is a bit of a shortcoming that everybody sees within the movie, and that is that although the list of assets is given, there are no numbers to them. And of course, we all want to see numbers within the list of assets. So there's no numbers in terms of the value of the house, the value of the land, the value of the bathroom supplies. So we rectified that a bit so that we can see some arbitrary numbers and then analyze the movie going forward in terms of reviewing of numbers. We put those into a balance sheet so we can see now that the Book of Fairy Tales is worth 10 shillings and the land is worth 8,000 shillings and the building's worth 4,000 shillings, and we gave him 990 shillings in terms of cash, and we're just assuming that that was like under the house, and we assume that that's in there at some place. Now, at this point, we're going to go forward from here and see the financial problem. That financial problem will be that Lord Farquaad is going to say that he does not own this land. Before we go forward, let's take some assumptions in terms of how he got to this point in time. This is where he is as of the beginning of the movie. Let's make some assumptions that the movie is going to assume that we are making generally in order to get to this point in time. So how did we value these items, and how did he acquire these items? Why does he believe he has rights to these items? Let's discuss that quickly, and then we'll go forward. So I'm going to assume that Shrek went out on his own at some point. I'm going to assume he went out with 1,000 shillings worth in his pocket, and that he's looking for a place to build his house, a nice swamp, preferably with a lake on it, possibly. And he's going to go out and he's going to find a place to build his house. Then he's going to physically build the house. So he's got his place, his land, he built the house on it. If we take a look at a trial balance, he's got cash and he's got capital, meaning the debits equal the credits of 0 at this point. And when he purchased the house, note that he got the land here. We said it's worth 8,000 shillings. It's a little difficult for us to come up with that 8,000 shillings because in a normal purchase transaction on a free market, he would have paid whatever for it, 8,000 shillings. In this case, he didn't pay for it. He went out, found it, he claimed it as his own. So we have to basically come up with a number of the value of that, even though there's not a transaction. A little bit difficult, but we're appraising it here, and we're saying it's worth 8,000 shillings. Then he built the land. So we're going to say it's 4,000 shillings. Once again, it's not like he bought the land, and the building. It's not like he bought the building. If he had bought the building, we would know exactly what the value was as of the time of purchase, because that's what he would have paid for it on a free market. However, he built the building, so we have to kind of appraise it and say, all right, it's worth 4,000 shillings in this case. Now, he didn't pay cash. It's not like we're going to reduce cash in order to pay for the land in the building. What we're going to do is say that he earned it. He earned that. He earned the land by going out and finding that land, claiming that land, and putting value into that land. And then he put value into that land by putting the building on it. And therefore, we're going to credit revenue, increasing the amount that he has earned on that. So that's how we're going to say that the assumption that he got his assets of the land and the building through this action of going out, finding the land, building the building on it. The only thing we don't have included here, we're just going to pull over the cash, and if we pulled over the cash, then this is what he would have. He'd have cash, land, building, capital at the beginning, plus the capital and income that would be included in that. That's where he's at this point in time. If we now looked at his financial statement being the point in time, the balance sheet of where he is at, we would say it's pretty close to where we ended up at, in that we see that the land is on there now. We see that the building is on there. And we see that he has cash, but we don't see the Book of Fairy Tales yet. That's what we're going to have to account for. Now, if we want to see how he got here, remember, we can then look at not the balance sheet, the point in time, but the income statement representing what has been earned throughout a point in time. And here we've got income of the 12,000. That's what he has. That includes the labor he put in to find and claim the land, as well as add value to it. So he's got income of 12,000, the amount that has been earned over this time period. And that, of course, was for the land and for the building that was built on the land. So now we have to talk about the bathroom supplies being, of course, the Book of Fairy Tales. So how did he acquire the Book of Fairy Tales? I'm going to assume in this case that he purchased the Book of Fairy Tales. And I'm going to assume he purchased it for 10 shillings. So if he purchased it for 10 shillings, what would happen to cash? He would have to pay or credit 10 shillings worth of cash, making cash go down to 9.90. What did he receive for his 10 shillings? The bathroom supplies, meaning supplies in that Book of Fairy Tales. So that's going to go up. The asset will go up by 10 shillings. So that's going to be this transaction here. Then if we pull over all of the other information on the trial balance, it would look like this. So now we have the full trial balance where we have the 9.90 in cash, the 10 shillings of toilet supplies, the land, the building, and the capital and the income that was earned up to this point in time. Now, if we look at the income statement, we still only have the 12 that was earned through acquiring the land, finding the land, and giving value to the land through building on the land. Note that we do not have an expense, and you might be saying, well, why aren't the bathroom supplies an expense? And they will be once he uses it, but we're going to put it on an asset, and then we're going to expense them as we use it in an accrual method in that way. So we're going to have to count the pages at the end of each month or whatever and see how many are left, and then expense it as they've been consumed or used. And so note that if we look at the income statement, how is it related to the balance sheet? This gives us timing. This gives us the story. So this is where he is at the beginning of the story, as of the point in time at the beginning of the movie, listing out his assets. How did he get to basically this capital amount, kind of the value of his assets minus liabilities? Well, part of the story is he earned 12,000 of it. And remember that he had 1,000 before he went out. And we didn't tell the story of how he got that. I'm assuming he had 1,000 when he journeyed out in the first place. So that's going to be part of the story that happened. And now if we think we want to tie that out a little bit more clearly, we could say, okay, here's the 13,000 that is the value, the assets minus the liabilities. How did he get to that point in time? We can say that we have the statement of equity, also measuring the timing of what was owed as of a beginning of the point in time through the time period. So we're saying, remember, he left with 1,000 of equity, that 1,000 being just the cash that he had. And then he earned 12,000. We saw that on the income statement. And so we have an increase in the value of the 12,000. And if we add the 1,000 to 12, that's where the 13 comes from. So the statement of owner's equity is going to back up this number, give us part of the story. Not the whole story, because we still don't know what happened at the beginning of that time. How did he get the 1,000? And the statement of owner's equity will include a piece of the story that will back it up, which is the income statement, meaning how much was earned over a certain time period. Now we're back to where we started off. This is where he's at as of the beginning of the movie. Here's the list of the assets that were given as of the beginning of the movie. We're making some assumptions in terms of how did he get to this point in time at the beginning of the movie. And now we can move forward to the major problem, and that's going to be Lord Farquaad here is going to say that this piece of land that he has on which he built his home, we're going to say that Lord Farquaad's going to say, you do not have legal right to it. This is not your piece of property, it's our piece of property. And then, of course, Shrek's going to have to deal with that problem. He's going to have to say, okay, well, do I have to recognize the fact that this land is not ours at this point in time? In which case, what happens to this financial statement? We have to record a loss at this point in time? Or is it true that this is kind of a frivolous case in that Lord Farquaad is wrong and Shrek does have claim or rights to this property? And that's what we'll discuss going forward.